All right, folks, in this video, we're going to be talking about daily bias. Now, I do apologize. My voice, I lost my voice. It's maybe a little bit raspy in this video, but as long as you understand me, that's all that matters, right? So this is going to help you folks a lot with your candle confirmation deals. Even if you don't trade candle confirmation, this is going to help you a lot with whatever strategy that you use. So in the last video that I did with it was titled something like why you lose money with candle confirmation. I talked about this briefly. Like whenever you're forming that bias, you want that, for a bullish scenario, a really simple way to go about doing it for a bullish scenario is to make sure you have previous day's highs intact, right? And for a bearish scenario, having previous day's lows intact. That's like a really clear-cut, simple way to make it easier on yourself, right? And for the folks that have not seen that video, there will be a link to that in the video description. So I do recommend that you watch that as well. And I mean, if you're learning candle confirmation, well, then really you need to go through that entire playlist, which yet again will be linked in the video description. You need to watch that entire playlist. And lastly, you need to be in my free Discord chat where I plug my plays real time before it happens, no hindsight, and you're given free educational material in here, no charge whatsoever. Link will be in the video description so you can join that. If you want to learn more about candle confirmation, you need to be in there 100%. Now, let's get right into the video though. We're forming a bias. So I think the best way to go about doing this is I'm going to kind of give you a few examples from the day. It's 2/19/2025. And I'm going to talk about how I approached it when I was forming my bias this morning. Okay. Now, not every single play is the same, but there's similar signatures in here, right? So today, in this specific example, and I'm going to give you a few different examples, different variations to look for in the marketplace. I'm not just going to give you one thing here. I'm going to give you several different things here to look for because it's the same signatures. We've already talked about how for a bearish scenario, previous day's lows being intact. For a bullish scenario, previous day's highs being intact to make it easier on yourself, right? So coming into today, I had this right here. Look at my cursor. Highest high in the middle, lower high on the left, lower high on the right. That is the information that I had available. Let me just kind of do a replay real quick to make it easier. This is the information. Like that's how this closed. We're coming into Wednesday. This is how that closed. What do I make of this chart? When you look at a chart like that, what do you make of that? Remember that each candle tells you a story. Each candle holds information. This candle, it came down and it cleaned out the liquidity beneath that candle. And it respected it. Why did it respect it? Why do I say that? Because it failed to displace. This candle could not close beneath that candle low. You see that? That then brings your focus to this to be ran out right here. Why? Because that's the next key liquidity pull that it has. It's telling you that it didn't respect that. It's telling you that it couldn't displace beneath that. That's a big level of liquidity right there where my cursor's pointing, folks. That the low of that candle, it cleaned it out and it couldn't clear it. And once that closes, that brings your focus to this. But here's the thing. This is also what I call my third candle draw. Third candle draw being right there. The third candle draw is a swing point. Like the third, in this case, we have a swing high level. And it is the low of the third candle in that price swing. And what you'll find is that is a very powerful magnet for price. A very powerful draw for price. Sure, this thing's been ramping up, right? But it's also in a daily premium. It took out daily buy side in here. And now we have third candle in there. But here's the thing, pay close attention. But because it failed to displace beneath that low right there, you wouldn't want to it probably isn't going to immediately come down and take out this low. It probably isn't going to immediately run that out because it needs more fuel. It needs more liquidity, liquidity being the fuel. Because price is telling you beforehand that liquidity beneath that candle, that daily candle, it respected it. It couldn't displace beneath it. It still has that swing point. It still has third candle draw right there where my cursor's pointing, but it needs more fuel, and that fuel is right there. Okay. And what happens was very early on, this thing came up and it took care of that. So you see like right after midnight, how that takes care of that right there. That's liquidity taken right after midnight. So when we're talking about candle confirmation and looking for plays, do you think now that that's been taken right there, look, now that the high of that candle right there has been taken, there is liquidity there. There's higher time frame buy side there taken. Do you think that it is in your best interest to look for a bullish play when that liquidity is already taken? No. That liquidity is going to fuel the move lower down into this. When you see a swing point like this, folks, a swing high like that, and it's in a premium, it's recently taken out higher time frame buy side, your focus should immediately go to that third candle low to be ran out. But if you have a specific case like this, where it has failed to displace previously beneath a low like that, you need to look for more fuel to be taken. And in this case, it's this high. Price took care of that high right after midnight. Now think back to the most recent video that I made on candle confirmation. Again, the video that was titled, Why You Lose Money with Candle Confirmation, or something like that. I told you, for your bearish deals, what do you want to see intact? You want to see the previous day's lows intact. Is it intact? It's right there. But here's the thing now. Now we have the liquidity to fuel that push lower. So once that level is taken right after midnight, my bias is bearish because I still have that intact, and that's taken, and it's third candle draw. That's how I formed the bias on this. Okay. So that liquidity is taken, and that's what you want. You need, here's a big thing, folks. Pay attention. You need liquidity to frame that move for your candle confirmation deals, where a lot of you are going to trouble. If you're losing money with candle confirmation, it's because your candle confirmation deals don't have the liquidity to fuel the move, and you don't have an opposing draw. What I'm giving you here is you have liquidity to frame the move right there above that high, and you have liquidity down there as your draw. Now, I'm not saying with your candle confirmation deals that you got to have previous day's highs specifically taken, but with this specific example, that's what you have. You have that liquidity taken, and you have that draw down below being your third candle draw. And again, if you folks want a video on third candle draw, just type in the comments below, video on third candle draw, or I want a video on third candle draw, just like you did with the previous video, so I can see that there's a demand for it. Because then if nobody comments, then I know, okay, everybody understands what third candle draw is. Everybody understands what it is. They understand it completely. I don't need to make a video on it. But if a lot of you don't know what that is, or you're still kind of unsure about it, just comment that below, and I can make a video on that here very soon as well. Okay. But we have third candle draw down below right there. Higher time frame buy side taken. Also notice another bonus of this. There's no higher time frame sell side taken in there either. Till down here. Look what happens. Right there, but right there, folks. You see that? What's that right there, folks? That is a candle confirmation deal to the downside. Look. That candle right there, 5 o'clock candle, it opens at 5 and it closes at 9. It displaces beneath that low. That's your confirmation. Or I mean, that is your, that's the conviction to the downside. Now you want to see price run out this low right there. Now, I want you to note something, folks. What do you notice about that? That draw is still intact down there. The previous lows down here, they're still intact down there. So what we have done here is we have an opposing draw. We've already established that we have daily third candle draw down below, which also happens to be the previous daily low, which I talked about in the previous video that you want to see intact. You have that in there. You also have liquidity frame in that push lower. You have liquidity taken. You have an opposing draw. You get your strong close with that opposing draw intact. Now, what do you want to see? What you want to see is you want to see your push up into your pivot. You want to see what I call the 5-minute fake push, right? The 5-minute fake move. All the criteria that I've taught you. Now you can go in and you can hunt for that, and that's when you're going to get really good follow through. because of what I just taught you there. You did the work on the higher time frame. You understand where your draw is. You understand you got major liquidity framing this move. It comes up, look, there's your push up, liquidity taken, pivot tested. You get your 1 minute displacement in there. You get your strong close in there, and it handles those lows just like that. Now, I had another deal on UJ. I had a bearish candle confirmation deal on this today. How do I go about forming my bias? Because my bias was bearish on this too. Well, here's the thing. This is in a downswing. Right now, this is in a downswing. High sign in the middle, lower high on the left, lower high on the right. Comes down, tags out the low. Comes down, tags out that low. Comes down, tags out that low. It's been in a downswing. And it closed bullish today, folks. Or not today, but on Tuesday. It closed bullish, but there's still no confirmed swing point put in. And what happens right off the bat, I'm talking about right off the bat, folks, this thing came up and it cleaned out that high right there. Remember, this is in a downswing. And very early on, we have major liquidity taken right there where my cursor's pointing. Higher time frame buy side. Yet again, there is liquidity to frame that move lower for you. And you have what intact? You have an opposing draw down below being the previous day's lows. Same rules that I gave you in that previous candle confirmation video. When we talked about bias, you have that low still intact. And you have this liquidity to frame it. So because, now here's also another thing. That's actually a bullish scenario when you see a close like that. Because price came down, it took out the low of that candle right there where my cursor's pointing. And it failed to displace beneath that. It closes strong. Whenever you see that scenario happen, your focus immediately goes to that high. So here's the thing. If this was to like come down, for example, without taking out that high, like just imagine with me, right? Close your eyes and imagine with me for a second that came down without cleaning out that high. And you got a bearish candle confirmation deal to the downside. Would that be a good deal? No, it wouldn't, because that is still intact. Because that took out that low. There's liquidity beneath that low. Again, each candle tells you a story. And if that was to close like that and leave that high intact up there, if it was to leave that high intact up there, you wouldn't really trust the bearish scenario all that much because that is still intact right there. It respected this. Since it respected that, we understand it's probably going to gravitate to that here next because it failed to displace. But after that is taken and it's in a downswing like this because there's no confirmed swing low put in, after that is taken, that liquidity can fuel that push lower. That liquidity can frame the bearish candle confirmation to the downside because now it's taken. See what I mean? But the issue that a lot of you are doing is you'll have a scenario like that where it'll close like that. It'll come down while leaving that intact. It'll be taking out major liquidity. Like price will be coming down and it'll be taken out, for example, like say that low down there. Like say it'll be cleaning out that low down there and you'll have like a bearish candle confirmation deal to the downside after it does that while having that opposing draw still up there. And what you'll do is you'll be looking for a short when it's already has all that liquidity taken down there. That liquidity down there has already been taken. You get your strong close. You look for that pullback into your pivot, the fake move, all that good stuff, and you get caught in a complete reversal. Price ends up ramping up on you. Price ends up going ballistic on you because you got that draw in there. See what I mean? The higher time frame draw in there. So you wouldn't really trust that bearish candle confirmation deal until that liquidity up there is taken, being that high. So what price does is it takes that out very early on, and that liquidity frames to move down into this. See that? Look, higher time frame buy side is taken, because that's the key thing. You want to see that higher time frame buy side taken. You get your strong close lower like that. Look at my cursor. That's your candle confirmation deal to the downside. Strong close beneath that low right there, folks. So what are the rules? You won't see that low right there now ran out. Your pivot right there has been tested. See that? Notice you have that draw still down there. Look right there. That is that higher time frame draw that I was just telling you about. That is intact. You want to see that left intact because that's your magnet. That's your draw. And again, where you're getting in trouble is a lot of you are looking for candle confirmation deals after that draw is taken. And then you're getting caught in a complete reversal because now it has too much liquidity taken. What I'm teaching you here is I'm ensuring by utilizing the previous day's lows and the previous day's highs that you have a draw intact. It's intact. And you have that liquidity up above the frame to move down into that. And you're staying with that tide. You see what I mean? You get the strong close, you get your pivot tested, all the good stuff. You get your 5-minute push up, fake move as I would call it, right? Right there. You get your displacement right there. But if you operate with the 1-to-1 as I've taught you, you were able to withstand that pullback because it did pull up a little bit right in there. But with a 1-to-1, you would have been fine. You would have stayed in it, and it ended up coming down and clearing out that low for you. Smooth like butter. So again, here is another deal that I was bullish on today. My bias was bullish because zoom out. Now here's another variation you can look for. Now, when you have price in an upswing, when I say an upswing, low, slow in the middle, higher low on the left, higher low on the right, it's curling up, and you see something like this, where price has a strong close like that. I want you to look, pay attention. Look right there. Price had a strong close above that high. You see that? How that closed above that? When you have that scenario, your bias is bullish. That's simple. Do you have any like opposing buy side being cleaned out? No. It's also in a discount. And when you see this scenario where it's curling up and it closes strong above that previous high, your focus now goes to that high right there to be cleaned out. See that? That is the liquidity. That is your draw. That is your magnet. Once that magnet's taken, as I've taught you in the previous video, you disregard it. You disregard it. That's your magnet. That's your draw. Okay? So you only want to stay with that tide in that case for your bias, for your bullish bias. So with this specific variation, strong close above previous day's highs, you look for the previous high to be ran out again. That's simple. What happened here was price came down and we cleaned out this liquidity right here. Higher time frame sell side. And I know it looks like I'm just going in here in hindsight, folks, but I'm not. This was plugged beforehand in my free Discord chat. So if you're not in there, you need to be in there. Plugged way before this had this big ramp up. Because of what I'm teaching you here, I came to that conclusion. You had this strong close higher right there. So I know my focus is going to be for this high right here to be ran out. But what happened was it came down and cleaned out that low. That was the liquidity that framed that push up. Stay with me. Pay close attention. Because I'm telling you, if you really grasp what I'm teaching you here, it's going to click for you. It's going to make so much sense. It's going to connect a lot of dots for you. That liquidity is your draw. You had this strong close. So what that tells me, when it has a strong close above a previous high like that, it did not respect it as resistance. So now your focus goes to that high to be ran out. The price comes down and it sells off. Think power of 3, for you SMC traders. That's what that is right there. That's power of 3 in motion. That's manipulation lower. But because we've done the work on the higher time frame and we have that strong close right there, we understand it's going to that. That gave us the direction. So we're not fooled by that manipulation run lower. We understand it's just going to do what? It's going to grab liquidity, and there's the liquidity to frame that push up. So what you're going to look for is you're going to look for candle confirmation deals to the upside on the way up into that draw. You have your manipulation run lower, it grabs liquidity, and that liquidity that it grabbed on that manipulation run lower is going to frame your bullish candle confirmation deals to the upside. See how that connects? Now you see how it all connects. Folks, I'm giving you gold on a platter right there. This is going to make all the difference for your candle confirmation deals, what I'm teaching you here. That liquidity frames the push up, and you want to stay with that push up. That is your draw. That is your magnet, and you want to see that previous day's highs to make it easier on yourself intact for your candle confirmation deals. And by the way, that was also, yes, it was a daily bullish candle confirmation deal as well. And look what happens. It presses up. Stack it. That's where you're going to get your best fall through. It comes up and it cleans out that high. That was your draw. That liquidity right there, look, there's Judas swing. Right after midnight, there's your Judas swing lower. It has this liquidity taken. That fuels that push up into this high right here. And you want to look for candle confirmation deals all the way up into your magnet right there. That's how you frame it. Now, I didn't get it set up on GU here, but it's the same process. You remember what I was just saying a second ago about third candle draw? And again, if you want a video on that, just comment below. I want a video on third candle draw. But it's pretty damn simple, folks. Look, high sign in the middle. Look at my cursor. High sign in the middle. Lower high on the left. Lower high on the right. You have third candle draw right there. It's in a premium. It's taking out significant buy side in here. And then when you have that third candle draw put in after taking out significant buy side like that, your focus needs to go to that low right there to be ran out. And what happens is, again, think power of three. Think about where that manipulation run happens. It happens very early on typically, right? Like right after midnight, early London. So what happens is very early on is price takes out that liquidity. Remember, there is liquidity above and below each candle. So we have liquidity right there taken with that intact down below. So we understand, okay, because we have third candle draw in there, it's going to gravitate to where my cursor is pointing. But look, price opens up right here. Look at my cursor. That candle opens there. And what does it do first things first? It expands higher. Look at my cursor, follow my cursor, and it takes out that liquidity. That liquidity is what's going to frame that move lower. And you're going to look for candle confirmation deals all the way down into that low right there, because that's your draw. That's third candle draw. Once it's taken, just disregard it. I'm not saying it can't move lower still, but you need to get away from the perfection mindset and just stick with what I'm giving you here, because it's going to make it so much easier on you. Once that's taken, disregard it. If it's intact, you have literally did the work on the higher time frame, and you have ensured that you are staying with that tide. You have liquidity to frame your move, and you have an opposing draw. That right there alone is going to shoot your win rate up substantially. Zoom in, 4 hour. So then you go to the 4 hour chart. What do you see happening? Look, higher time frame buy side has been cleaned out. So this thing is curling lower off of higher time frame buy side. Remember, price moves in the direction of least resistance. So you have all that liquidity taken, and you have third candle draw down below in here. Now, it actually did give a 4 hour deal right here, but the draw was taken at that point. So I didn't partake in this because that was taken. It still ended up moving lower because it's got that imbalance draw down below. But here's the thing, folks. All the way down into that draw, you'd be looking for candle confirmation deals lower. Look, stacking. All the way lower, it's stacking. It was super weak. All the way down into your third candle draw down there. And again, even if you don't trade candle confirmation, what I'm teaching you here is very useful because it allows you to form a direction. You have liquidity taken up above, and you have third candle draw down below. You did the work on the daily chart to see that. The daily chart told you what it wanted to do, and then you can do like your top-down analysis, and then you can frame trade setups based off that and look for it to draw down to that low. That's how you approach it. My bias on EU today was bearish. First things first. Why? Because I had this. Remember I just told you a second ago about price having a strong close beneath a previous low? This is in a downswing. Highest high in the middle. Look at my cursor. Highest high in the middle. Lower high on the left. Lower high on the right. This is in a downswing. It prices out that low right there, and then this closes strong. So when that closes strong, here, let me just go replay. That's what you're left with. So here's the thing, folks. If you have a scenario like this where it closes strong beneath a previous low like that, it's in a downswing like that, there's no higher time frame sell side taken to the downside on this push lower. It's in a premium. When you have a strong close beneath a previous low like that, your bias is bearish until that's taken, where my cursor's pointing. You don't trust it for a bullish. So what that means is also you wouldn't really trust it for a bullish scenario. So if you were to see like a bullish candle confirmation deal to the upside on this thing, while that is taken, all right, so just imagine with me, like you get a big push up, right? I know it's just like, just imagine with me. Just imagine with me that that's your candle confirmation deal. You get a strong close higher in your lower time frame right there, but that low right there is still intact where my cursor's pointing. That is intact right there, folks. You would not, I repeat, you would not trust a bullish candle confirmation deal if that's intact because it had the strong close beneath this low. Because what that tells you is on the higher time frame perspective, it did not respect that low. So your focus will go to that low to be cleaned out. So if you have a move away from that, with that being intact, your chances of being caught in a manipulation run are high. Because think power of three, it's pushing up first things first. And you're looking for candle confirmation deals. What? You're looking for bullish candle confirmation deals when that draw is intact down there. So your chances of being caught in that manipulation run in that power of 3 are much higher because you still got that draw down below because it had that strong close. So because you had that strong close on the daily, your focus needs to be to run out that low right there. After that low is run out, then you could look for bullish candle confirmation deals to the upside. But when you get a strong close lower like that on the daily chart, you would not trust to move away from that until that's taken. So what happens? Price comes up. It finds resistance after taking out Asian session highs buy side. That's what it did. Look, it comes up like right after midnight. Asian session highs buy side's taken. You still got that strong close down there. So you wouldn't trust this push up that you're seeing right now. You would not be hunting for bullish candle confirmation deals on the 4 hour or the 1 hour with that intact down there. Comes down, cleans it out. So yeah, you can look for candle confirmation deals to the downside when that's intact. But then after that previous low is taken, then you can pivot. Then you can look for bullish deals once that's taken and it's curling back up later. Then you can look for, like for example, boom right there. Then you can look for that push up, cleans it out, it runs it out. See what I mean? That work is done on the daily. When you're establishing your direction, folks, the work is done. I repeat, the work is done on the daily chart because that's what it told you, the strong close. When you get a strong close lower, bias bearish. Strong close higher, bias bullish. And once it's taken, then you can pivot and look for opposing candle confirmation deals. This hasn't happened yet, but it kind of give you another example. What do you think my bias would be coming into when I get something like this? What do you think my bias is going to be? It hasn't really taken out. It's basically relative equalize. It just barely missed it. What do you think my bias would be with something like this? I want you to answer among yourselves real quick with what I just taught you. And where do you think you would be, how you would approach this with candle confirmation? Your bias is bullish. You see that strong close above that previous high right there? Look at my cursor. That high, close strong. Your focus goes to that high right there to be ran out. So you would not, I repeat, you would not trust like a bearish candle confirmation deal to the downside until that's ran out right there. Because you got a strong close above this high. It's in that upswing. There's no higher time frame big level taken, no higher time frame buy side taken in there. It just gets curling up right now. So you don't want to fight that tide with that magnet being the previous high intact. You wouldn't trust a bearish candle confirmation deal until that's ran out. So what that means is you would be hunting for bullish candle confirmation deals until that's cleaned out. Once it's cleaned out, then you can pivot. And then you can look for something potentially a little bit later for a bearish deal. What about EU? What about right here? How would you approach that? Bearish. It's in that downswing. Now, actually, the weekly is bullish on this. But I'm giving you simple rules about how to approach the daily bias. So when you get like a strong close like that to the downside beneath that low, you wouldn't really trust lower time frame bullish candle confirmation deals that are fighting that. Because you got that still intact down there, you see? Once it's taken, once that low's taken, then you can look for bullish deals because that's liquidity to frame that push up. But what that daily chart tells you is it didn't respect that low. It displaced beneath it. And you see how there's not really a whole lot in there propping it up. Now, I'm not saying it's impossible for it to still press up. But notice how there's not much in there on the higher time frame to support it. So does it really make sense to look for a bullish candle confirmation deal fighting that? It's in that downswing. Low, tagged out right there. Low, tagged out right there. It's in that downswing, bearish momentum. It has a strong close lower. No higher time frame daily sell side taken. Nothing to support it right here. It closes strong beneath that low. So your focus will be for that right there to be ran out. So what you can do is, yeah, you can look for bearish candle confirmation deals down to the draw, but once that's taken, you'd be much more trusting of a bullish scenario. So it comes down, takes that. Then you could look for bullish candle confirmation deals on the way up after that's taken. But these daily candles are what's going to frame your play, your candle confirmation deals. Strong close, look for bearish scenario until it's taken. Now here's something else. You look right here. Now when you get a scenario like this, because I was just telling you a second ago, when you get like a strong close lower, your focus is to look for it to tag out the low again. But whenever price comes down and we clean out a previous low like this, look at my cursor. So you see that daily candle where my cursor's moving back and forth? That low right there was cleaned out right here. Did it close strong beneath it? Did it close strong beneath that low right there? It didn't, did it? It didn't. So whenever you get a case like that, price is telling you it doesn't want to move lower. It respected that support. So when you're looking for candle confirmation deals in this environment, you would not look for that low to be cleaned out. Your focus would go to the previous daily high right there. Look at my cursor right there. And you would frame your candle confirmation deals all the way up into that high right there. That daily candle, you did all the work on the daily chart to form that bias. And you would stay with that bias until that right there is cleaned out. Took that out, failed to displace, it respected it. Your focus is to run out that high right there. Once it's taken, you can just disregard it. So you're going to look for bullish plays all the way up into that right there. See what I mean? And you're just going, look, you're just going to piggyback that up into your draw right there. Again, because that daily failed to displace, you would basically be anticipating that it's not going to exceed that right there. That it's not going to exceed that low right there. Because the daily told you it didn't want to, so listen to it. The daily failed to displace, so your focus goes to that high. So that's why, look right here, you would not trust like a strong close lower to the downside. That's why you would not, for example, be looking for to tag out these lows down to this right here, because the daily already told you that it didn't want to move lower. The daily failed to displace beneath the previous low, so then that brings your focus to the previous day highs to be ran out. So you wouldn't trust bearish candle confirmation deals in that environment. You would be looking for bullish deals all the way up until that highs ran out. Then you would just disregard it. That's how you form a bias, folks. Strong close lower, you look for a bearish scenario. Strong close higher, you look for the bullish scenario. In the scenario where it fails to displace, you do the opposite. Fails to displace, look for the high to be ran out. All right. And of course, you would reverse for a bullish. You would reverse for if it was like, if it was coming down, you would just reverse it. Scenarios where you have a swing point put in, we already talked about that. I did that with like GU and the other one. And again, scenarios where you got a swing point put in, your focus goes to the third candle to be ran out. So your key takeaway from this video, folks, is you need an opposing draw. That's what we established. And you need liquidity to frame that move. Okay? You need liquidity to frame that move. So again, just to really drive this point across, there's your draw, where that more of my cursor is pointing, and there's liquidity to frame that move. So that higher time frame liquidity in here, that frames that push up. See how it already took out this right here? It took out these lows. It was making new lows. It's curling up here, and you could piggyback that. That liquidity frames the candle confirmation deal to the upside, and then you have an opposing draw up here that you can take it up into. Liquidity that frames it, and there's your magnet. Liquidity that frames it, there's your magnet. And you did the work on the daily chart to establish that. Now, another valid question would be, okay, but what about in a scenario where you have the strong close, right? Because I think you guys understand, like when I talk about scenarios like what I just did on the EU and like right here, for example, like we talked about that UJ, about how that previous day's highs, liquidity frame that pushed lower, it's still in the downswing. But what about in a scenario where, say, for example, you get a strong close, like what we had on EU. And let's say like it doesn't take out the previous day's highs to frame that move, right? Because that would be a valid question. Because we were just talking about a second ago about how EU displaced beneath that low right there. See what I mean? So we know our focus would be for that low, what I just marked on, look at my cursor, for that low right there to be ran out. We know that's where our focus would be. But what about in a case where it doesn't take out that previous high? What do you do in that case? Well, I mean, previous day's highs isn't the only liquidity pool, folks. Sure, like we know where our direction is going to be. We want to see that low ran out. But what liquidity pool do we use in that case then? Like, can we use any other liquidity pools? You can. Go into your chart, look for Asian session highs and higher time frame buy side. Now, I'm not going to sit and act like I was a super big fan of this actually, because I was like more focused on, look at my cursor right here. You see that? Because I have higher time frame buy side right there. I was more focused on that to be ran out today, because that's just a bigger level. So I don't need like that previous high to be ran out. I know I want that low to be ran out, but I want liquidity to frame that push lower. Because if you don't have any liquidity taken, like any major buy side liquidity taken, then you're still not going to get good fall through. You need the liquidity taken and you need the opposing draw. We did the work and we established the opposing draws down here. But now we want liquidity taken. And the liquidity today that framed that push lower was Asian session highs buy side. Because again, like that came up here, folks. Look right here. And it already took, Asian session begins at 19, ends at midnight. And it took care of that. And that framed that push lower down into that strong close. The liquidity framed it right there, and then that fueled it lower. Candle confirmation deals to the downside. You can piggyback it down and do that. If you want to improve your success rate even more, though, in a case like that, just stick with higher time frame levels. Because that's what I was doing on this, folks. That's what I was waiting on this. I was waiting for this higher time frame buy side to be taken, because that would be higher probability. Because then I have the strong close, and then I have a higher time frame level to frame my candle confirmation deal down into that strong close. You see? So, folks, I know that was a lot of info. Watch this video several times if you need to, because I just gave you the recipe. When it comes to daily bias, this is the only video that you'll need. Really study it. Go into your charts. Like, don't expect it to really just click from watching one video, folks. You got to go into your charts and you got to look for it. You got to study it. And again, join my free Discord chat. Follow along with me day in, day out. And I'm telling you, it's going to start to click and you're going to see what I'm talking about. All right. Again, if you enjoyed this video, make sure you leave a like, you subscribe to the channel. And if you do want to learn more about candle confirmation, there's going to be a link to my entire playlist on candle confirmation in the video description. Make sure you watch that as well. All right. Y'all take care.